I believe these deal sponsors can execute this. This fits my return profile. This makes sense. I'm going to pull the trigger. Welcome back to the channel. My name is Brian Force here with Deep Blue Capital, and today we are talking about the top 5 mistakes that new multifamily investors make. Before we get started, you know the drill. Please hit the notification bell, subscribe button, all that type of stuff, and then please go on over to deepbluere.com. Create your investor profile there. Schedule a call with one of our partners. You'll get access to our weekly newsletter, all of our upcoming opportunities to invest in deals alongside of us, so make sure you check that out and get involved. So you're new to multifamily investing, or you've been doing this for a while and you're just curious, what are the 5 mistakes that new multifamily investors make? They're very simple. We're going to take them in order. Number 1 is they do not do enough due diligence on the deal sponsor. It is so important to make sure that you are partnering with the right operators to help you hit your goals when you're investing in a multifamily project. You could have the best deal in the world. The slide deck looks awesome. The webcast went really well and you're ready to pull the trigger. But if that operator doesn't know how to manage the asset well and execute the business plan, it's going to be difficult to hit those returns. So we take it in this order: sponsor, deal, in that order. You want to make sure that you're partnering with people that have a real track record, that are credible, that have been through market cycles before, that understand how to execute a business plan in all different market environments on a large multifamily syndication. If you don't have that, then all the returns that you're advertising on your little slide deck or your offering memorandum and all that type of stuff, it's going to be difficult to hit those returns if you don't have a great operator in place. So get to know your deal sponsors before you invest in any multifamily syndication. Number 2 is not doing enough due diligence on the deal itself. Now, one of the great things about being able to invest in multifamily real estate is partnering with people so that you can be hands-off and allow operators to run the asset. You collect the passive income, you build generational wealth, take advantage of the tax strategies, all that type of stuff. But you do need to know at some small level whether or not a deal is a good deal. And you need to be able to tell, are the returns that these sponsors are advertising, are they realistic? Are they achievable? And the way to do that is to get a little bit educated. Listen to podcasts like the More Doors podcast from Deep Blue Capital every Wednesday. Read books, educate yourself, go online to channels like ours, YouTube University. Make sure that you have enough rudimentary understanding of multifamily deals, how to execute business plans, and the market area in which you're investing, so you know, hey, this business plan sounds solid to me. I believe these deal sponsors can execute this. This fits my return profile. This makes sense. I'm going to pull the trigger. You don't need to be a multifamily investing expert to make it part of your portfolio. In fact, if you're really great at something else, you shouldn't be a multifamily expert, but you do need to know enough to look at a deal that someone is offering you and know whether or not it's realistic and achievable, so you're not getting into a deal that's going to let you down. The number 3 investor mistake that we see new multifamily investors make is investing in the wrong kind of deals for their goals. Multifamily deals come with all kinds of different return profiles and risk profiles. Sometimes you're going to invest you have the opportunity to invest in a Class C deal with a huge upside potential and a heavy lift, and that heavy lift also creates a little bit more risk. If you're at a certain period in your wealth building journey, you may not want to take on that risk to capture that upside potential. Time horizon is very important too. If you have a shorter time horizon to meet your financial goals, you probably don't want to invest in something like a 10-year hold. That means you're not going to get your money back for quite a while. Even though you're going to get a lot of it when you do get it back, you're going to have a longer period of time there that doesn't match up with what you're trying to accomplish financially. So rather than just investing in deals that look like they have good returns, you want to understand the risk profile as well whether or not that fits with where you're at in your wealth building journey, and the return profile, the timeline, everything about that deal to know that it aligns with what you're trying to accomplish financially, not just invest in it because it looks like a good deal. The fourth mistake that we see new multifamily investors make a lot is only investing in the same kind of deal over and over and over again. There's really nothing wrong with that if that deal really works for you and if you're really confident in it. I always preach diversity. I always preach diversification outside of just multifamily investing. I think you should have some of your money in multifamily. I think you should have some of your money in other investments. I think that you should build a well-rounded portfolio. When we come to talking about just multifamily investing specifically, investing in the same type of asset class in the same area over and over again can be great if you truly understand the area, you truly understand those deals, and you are ultimately confident in your partners and your sponsors' ability to execute. If you want to build a more well-rounded and diversified portfolio, it's important to invest in different types of asset classes. That doesn't mean going and doing bad deals just so you can become more diversified, but you want a healthy mix of class A, B, C, commercial, whatever it is that helps you round out your portfolio, so long as you're working with investors that you trust, sponsors that you trust, operators that you trust, and all of those deals still align with your wealth building goals and your timeline, that you're not violating number 3 just to diversify your portfolio. Rather than invest in the exact same type of deal over and over and over, I would preach portfolio diversification. It's one of the mistakes that we do make. So unless you're ultimately confident, spread the love around a little bit. And the number 5 mistake that we see new multifamily investors make is investing money that you need to keep liquid. I don't know how multifamily investors make this mistake. Please don't be one that does it. You're investing in longer term holds there. This is real estate. This is wealth building. It's no magic bullet, magic secret. When you invest in multifamily real estate, you are going to be creating passive income. You are going to be creating cash flow, but you're going to have your equity in that deal for at least a few years in order to create that cash flow. So don't take $100,000 that you need tomorrow and go invest it in a multifamily deal. It won't be liquid anymore. So please, 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 this is one of the first questions we ask in our new investor calls is, what can you comfortably invest that you have liquid that you don't need back in the next 5 years, right? These are longer term strategies. We're operating large assets here that have long-term business plans. We're going to hit great returns over the course of our business plan, but we're not going to have that money liquid 1 month after you invest it. So please don't make probably the most crucial mistake and invest money that you need tomorrow. Make sure that you're investing money that you are comfortable being tied up for a while and that you're going to get a great return on. That just about does it for us. Those are the top 5 mistakes that we see new multifamily investors make. If you want to avoid making these mistakes, make sure you check out deepbluere.com, create your investor profile, schedule a call with us. We'd love to hear more about your wealth building goals and how our opportunities can align with them. Hit the notification bell, subscribe button, all that type of stuff. Appreciate you watching. I'm Brian Force with Deep Blue Capital, and we look forward to meeting and talking to you soon.